Now, across the entire stock market, there's only a handful, maybe 10 or so different high yield dividend ETFs that I think will do good in almost any market conditions. Now, this is because during good times, these ETFs have the qualities to definitely grow and pay tons of income to investors. But during bad times, during market declines, these ETFs are not going to fall off a cliff necessarily, have defensive qualities, solid strategies, and underlines that should weather the storm. So in this video, I'm going to share with you guys why I think these names could be safe in, generally speaking, any market conditions, and then I'm going to share with you every single one of the ETFs and share with you why I think each of the ETFs made the list. All to say that if you're a long-term dividend investor, you definitely want to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey, and my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So in order for a higher yield dividend ETF to make this list of about 10 different ETFs, again across hundreds and hundreds of ETFs, in my opinion, is going to come down to things like the fund provider, how trustworthy they are, if or if not the underlying inside of each of these ETFs is index based, let's say the S&P 500 or the NASDAQ 100, or ish, meaning that it offers exposure to maybe some of the index, etc. Also, it's going to have to come down to the strategy. Some of the ETFs these days have crazy strategies that might do well when the market is ripping, but during downturns, some of the strategies out there are out of control. Also, defensive qualities, the use of cover calls, or even buying puts. There's different defensive qualities that some of these ETFs could potentially use. The track record also matters. Some of these ETFs have been through good times and bad times, and we've been able to see what they've done. And speaking of that, the recovery is also very important. How much an ETF goes down is one thing, but how fast it's potentially going to be able to recover is going to be another. So now that you guys sort of know my framework, let's go through the first of 10 different ETFs that I think are going to do just fine, again, generally speaking, during any market conditions. The first of the 10 ETFs that I think will do just fine during most market conditions is going to be DVO, the Amplify CWP Enhanced Dividend Income ETF. DVO is comprised of high-quality dividend-oriented stocks, along with covered calls and individual names. Now, even though DVO's holdings list is pretty small, there's only around 25, 27 different holdings. The holdings are, generally speaking, pretty tried and true, names that can recover quite quickly, pretty diversified at that, and also the fund manager sells individual cover calls and individual names in order to help with some downside protection and help generate a lot more income potential. Now, because of that, names like DVO, even during a sideways or even slightly down trading market, DVO is going to be able to offer a high distribution rate of around 5%, which is definitely going to make up for some lost grounds if we see sustained market downturns or, of course, sideways trading markets. DVO is overall a great name that's been around for a while. It's done great during most market conditions, so it definitely makes the list. Next up, we have an index-based high-income ETF. This is going to be the JP Morgan NASDAQ Equity Premium Income ETF, JEPQ, which offers around a 10 or 11% yield, has not decayed whatsoever since inception, and offers you NASDAQ 100 exposure through a high-income strategy. Now, because this ETF utilizes a cover call strategy, if the NASDAQ drops in price, it doesn't necessarily mean that JEPQ's income generation is necessarily going to drop. Sometimes volatility in the market can actually make the distributions get bigger. JEPQ has been trading for several years now. It's seen some decent-sized drops in the market and has always recovered pretty nicely. Another name that I trust is QDVO, the Amplify CWP Growth and Income ETF. This ETF offers exposure to some higher beta individual names, which definitely have the potential to go up very quickly and drop very quickly. But again, because the holdings are pretty well diversified and of course the use of covered calls, I think QDVO will be just fine. Not to mention QDVO has a distribution rate of around 12%, so this ETF is going to be giving off a lot of income generation along with capital appreciation if and when the market turns bullish. Another name that definitely has got to make the list is going to be JEPI, the JP Morgan Equity Premium Income ETF. This ETF offers diversified exposure, a lot of tried and true, even defensive names within the holdings, but then along with it, the use of covered calls is going to help protect against some downside and generate a lot of income potential, which can definitely help, especially if the market is trading sideways or even down for short periods. A few more names to go through. Bali, or the iShares Advantage Large Cap Income ETF, another ETF that offers large cap exposure, some of the best single holdings across the entire market. Again, guys, it really comes down to the holdings and the strategy when it comes to ETF picking. Next, we have JEPIQ, another NASDAQ 100 Premium Income ETF. This ETF offers around a 10% yield more or less and offers some potential upside because of the dynamic selling of call options. Now, during downturns, this ETF could drop in price significantly because it doesn't completely hedge the underlying, but the recovery is also going to be great if and when the Nasdaq moves up quickly. Another great option is going to be GPIX. This is the same thing as the last one, only this one is the S&P 500 version, again offering you around an 8% yield and again dynamically selling call options. So this ETF, because of this specific strategy, can definitely recover quite quickly. Another S&P 500 based high income ETF is iSpy. This ETF has done great as far as targeting the total returns of the S&P, trades very closely along with it, has done very good since inception. The last two names that I would trust during most market conditions is going to be SPYI and of course one of my favorites, the NEOS Nasdaq 100 high income ETF QQQI. Both of these ETFs offer high yields, 12% for this one, 14.5% for that one. Now, as a side note, guys, I do deep dives into all of these different ETFs on my channel, so if you want to check out some of those, after we finish this video, be my guest. So now that we went through 10 different higher income ETFs that I personally would trust during most market conditions, I lastly want to hear from you guys down below. When it comes to the stock market, when things are good and when things are bad, what are a few different dividend-focused ETFs that you personally would trust long-term in your portfolio? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.